You just lent your best friend $500 3 months ago, and 40% of Americans who do this either lose their money or damage the relationship. Ever wonder why banks lend millions to strangers without drama, but your $500 is about to end a decade-long friendship? Today, I'll explain why lending money to friends destroys relationships, while institutional lending actually works like you're 5 years old. By the end, you'll understand whether the problem is trust, human nature, or something fundamental. Here's what's happening in your brain when you lend money to a friend. You're accidentally activating two completely different operating systems at the same time, and they're crashing into each other. Psychologists call these communal norms and exchange norms. Communal norms are friendship mode. You help each other without keeping score, you're flexible, you care about feelings. Exchange norms are business model. Clear terms, formal obligations, enforceable consequences, everything written down. Nobody takes anything personally because it's all just business. Banks live entirely in that second world, which is exactly why they work. Think about the last time you took out any kind of loan from a bank. You signed paperwork and agreed to specific terms. They told you exactly when payments are due and what the interest rate would be. They explained what happens if you're late. Not to be mean, just as information. You probably got a payment schedule, an amortization table, and a phone number to call with questions. And here's the thing, when that payment is due, nobody calls you crying about how disappointed they are. An automated system just charges your account or sends you a notice without any drama. Zero emotions and zero social awkwardness. It's beautifully cold and impersonal, and that's exactly why it functions. Now think about how you lent money to your friend. You probably said something like, "Whenever you can," or "No rush," or "Just get it back to me when things are better," right? You were trying to be kind and understanding. But congratulations, you just created a loan with zero enforceable terms and infinite room for misunderstanding. You don't know when it's due, and they don't know either. You don't know if asking about it makes you look greedy. They don't know if bringing it up makes them look irresponsible. Every interaction now has this weird cloud hanging over it. Here's where things get even worse. When your friend doesn't pay you back on time, whatever on time means in a world where you never actually set a time, you start keeping score. You can't help it because your brain does this automatically. Your brain switches from communal mode to exchange mode, whether you want it to or not. Suddenly you notice they bought new shoes or went to a concert. They ordered appetizers at dinner while you're sitting there having skipped lunch to save money. You see them post vacation photos on Instagram while your $500 is still missing. Your friendship brain is screaming, "Don't be petty, they're going through something." But your exchange brain is screaming, "They owe you money, and they're acting like it never happened." You're just quietly building a resentment spreadsheet in your mind with automatic updates. Meanwhile, your friend is going through their own personal hell. They feel judged every time they see you, wondering what you're thinking. They want to pay you back, but now they're broke and embarrassed and they don't know how to bring it up. So they avoid you and start pulling away from the friendship. They stop texting as much and make excuses to skip plans. They're not a bad person. They're just trapped in a situation where they owe you money and friendship at the same time. Those two debts are completely incompatible. And the longer it goes on, the worse it gets for both of you. This matters to you because we've all been taught that lending money to friends is about generosity and trust. It's not. It's about accidentally creating a broken contract that nobody agreed to and expecting both parties to figure it out through telepathy. Banks don't have this problem because they removed all the variables that make human relationships complicated. There's no friendship to preserve or feelings to protect. No social consequences for asking where your money is. When Bank of America sends you a payment reminder, you don't text your group chat about how BOA is being weird lately. A Federal Reserve study found that nearly 40% of Americans have lent money to friends or family. About half of those people either didn't get fully paid back or the relationship was damaged. That means 20% of people who tried to help someone they cared about ended up worse off for it. And we're not talking about small amounts. The average informal loan between friends is around $3,700, which is real money for most people. That's not a coincidence. It's a design flaw in how we're approaching the entire situation. You're using friendship tools to solve a business problem. Here's what most people miss. When you lend money to a friend, you're not actually being more compassionate than a bank. You're being less clear. Banks are honest. They want their money back. Here are the terms. Sign here. You're lying. You say no pressure, but there's absolutely pressure. You're just making your friend guess when and how much. You say whenever you can, But you don't mean in 5 years when you win the lottery. You mean in a few weeks, maybe a couple months max. Your friend doesn't know that. Nobody wins. And here's the part that really stings. The power dynamic is completely backward. When you owe a bank money, you're the vulnerable one, and they're the powerful institution. That's uncomfortable, but it's also stable. Everyone knows where they stand. When you owe your friend money, suddenly they have power over you in a relationship that's supposed to be equal. You feel small every time you see them, and they feel resentful every time they remember you haven't paid them back. The friendship turns into a weird employer-employee situation where nobody applied for the job. Banks also have one more massive advantage. They don't care about your story. You can't call Wells Fargo and explain that you're behind on your car payment because your cat needed surgery. They'll listen politely, maybe offer a hardship program, but the terms don't change based on how sad your story is. With friends, the story is everything. They know your life. They care about you. So every missed payment comes with context and excuses and emotional labor. You're not just negotiating money. You're negotiating empathy and understanding. That's exhausting for both sides. Here's another thing banks do that friends don't. They price in risk from the beginning. When you have bad credit, your interest rate goes up. The bank is basically saying, we'll still lend to you, but we're charging extra because you might not pay us back. It's honest. Friends can't do this. You can't tell your buddy, sure, I'll lend you money, but since you've been flaky before, I'm charging you 15% interest. That would destroy the friendship immediately. So instead, you lend at 0% and just absorb all the risk yourself. Then you're shocked when that risk becomes reality. There's also the scale problem. Banks lend to thousands of people. If 10% default, they're fine because they planned for it. You probably lend money to one friend every few years. If that one person doesn't pay you back, you just lost 100% of your portfolio. You can't absorb that hit the way an institution can. You don't have a diversified lending strategy. You have one friend who needed help, and now you're eating ramen for a month. So here's the actual solution, and it's going to feel harsh, but it's the only thing that works. If someone you care about needs money, you have exactly 2 good options. Option 1. Gift it with 0 expectation of return. Tell them clearly, this is a gift, not a loan. Don't pay me back. I mean it. If you can't afford to gift it, you can't afford to lend it. Option 2. Direct them to a formal institution, credit union, community lender, payment plan, whatever. Let a third party handle the terms and enforcement so your relationship stays clean. Will they be offended you won't lend them money? Maybe. But you know what's worse? A friend becoming a permanent ex-friend because money destroyed what you built together over years. To recap, banks succeed because they use clear terms and 0 emotional stakes. Friends fail because vague agreements create misunderstanding and resentment. Research shows half of friend loans damage relationships or don't get repaid. The fix is gifting money clearly or keeping financial transactions separate from emotional relationships entirely. So here's the real question. Is protecting the friendship by saying no to a loan request actually the kinder choice? Or does refusing to help someone you care about make you the selfish one?